It's Tuesday, July 23rd, 2024. Thanks for joining me today. We have a lot to talk about today, a lot to go over. Please feel free to comment down below on any of these articles that I'm about ready to share with you, anything you want to relate to us about what's happening in your local economy. If you're in a different country, let us know what you're seeing over in your country. But I want to start with this first article on CNBC today. GM shares sink 7% despite second quarter beat as Wall Street fears good times won't last. The good times are coming to an end without a doubt, ladies and gentlemen. People have maxed out the credit cards. People are living paycheck to paycheck. 78% of this country living paycheck to paycheck. They cannot afford to buy a car. They cannot afford the interest rate of these cars. They are living paycheck to paycheck. And the good times are now ending. As we get deeper into this summer, we're going to continue to see more cracks with this failing, decaying U.S. economy. And the average person, if they can't buy a car, how in the world are they going to buy a house? I don't think the people on the television have been very honest with us. You see the car lots, you see the SUVs and the pickup trucks piling up. I drove by an RV dealership today, one that I filmed a couple times, and this is the most inventory I have ever seen in my life. Tesla reports 7% drop in auto revenue as earnings fall short of Wall Street estimates. People just don't have the money. They can't afford the payments of these vehicles with interest rates as high as they are. And it's not just interest rates. Look at the price. What's the average price of a new car today? It's over $51,000. We can talk interest rates all day about, oh, people aren't buying houses because mortgage rates are too high. People, aren't buying cars because interest rates are too high on the loans. I think it's more than that. I think it's the price of cars, the price of houses have gotten way too expensive. And I think it's more the price of these type of assets, more so than interest. But most Americans don't look at the price of anything. They just look if they can make the monthly payment. And this is having an effect to a degree, without a doubt. But at the end of the day, everything has gotten so expensive. People just cannot afford it. UPS shares fall 12% post worst day on record after earnings miss and guidance cut. Year to date, UPS is down. Their stock is down over 19%. In the past year, their stock is down 32%. Why? Weak demand, ladies and gentlemen. Weak demand. Soft pricing and shipping in the shipping sector. And you're seeing this not just in UPS, but you're seeing it just with trucking in general. If you talk to a truck driver, like we did a couple weeks ago, 80% of them just said that they're making less money. 80% of the people we interviewed, truck drivers, said they were making less money. And unfortunately, they're working harder. They're putting in more hours, making less money. It's going to be very, very interesting to see how we end this year. The economy is in such bad shape, ladies and gentlemen. They've been lying to us day after day for years that everything was fine. This economy has been in trouble for a very, very long time. Most of you know that. You saw the malls shutting down. You saw the restaurants shutting down. You saw the retailers shutting down. You've been watching the cars and trucks piling up at the dealerships. You know friends and family that have lost jobs. You know that most people are paycheck to paycheck. U.S. savings rate, 3.9%. How in the world do we have an economy that is going to survive when people can only save 3.9% of their paycheck? And prices of homes and cars and food and insurance are just skyrocketing. How in the world does this last? Americans are falling behind on their car payments. This is on Fox today. We've talked about this numerous times. Defaults are up 11% this year. Car repossessions are up over 23%. Auto loan balances now sit at $1.62 trillion. The average new car interest rate is 7.9%, up from 4.18% of July of 2021. The average used car interest rate, you're going to buy a used car, you need to borrow money, the average rate is 8.55%. That's if you have good credit. The people who don't have such good credit, it's a little shaky, they're paying well over 10% to buy a used car. Really, really be careful of the financial decisions you're making right now. If you can get away with just paying cash and getting a cheaper car, that's what I would do. I would stay, personally, this is just me, not financial advice. You can do whatever you want to do. I'm just thinking out loud and I'm sharing with you my thoughts. I would not be buying a big ticket item right now. I would not be buying a house. I would not buy a car in this. I would not buy a truck. I would not buy a boat, an RV. Prices are coming down. We're seeing this. In areas of the country, we are seeing home prices coming down. We are seeing car prices coming down. You're seeing boat prices coming down. RVs are coming down, but not enough. Very, very little. Things are about to get real. Very, very soon. I don't know if that's 6 months from now, a year from now, but we're going to see things get very, very real because people are going to have to start unloading the toys, the sports car, the boat, the jet ski, things of that nature, because they're going to do everything they can to hold on to that house, their main asset. And then at some point, they're going to have to let those go too. People are in big, big trouble. Signs of severe credit card and auto loan stress in Gen Z. This on The Hedge today. Check these articles out. Over 25% of those who rent have unpaid bills. Let me repeat that. Over 25% of people who rent have unpaid bills. Over 10% have not paid their water, gas, or electric bills. What in the world is going on in this country? What is really happening to the U.S. economy? 12% of homeowners have unpaid bills. 12% of homeowners have unpaid bills. Auto loans right now are plunging. You're seeing people not going in and filing an auto loan because they're not buying cars, they're not buying trucks, they're not buying RVs like they once were. So this to me is all an indication, from people not paying their bills to people not applying for an auto loan. This is an indication that this economy is much worse than they have been telling us. Here's one from CNBC. June home sales slump, pointing to a buyer's market as supply increases. Hold on. This is not a buyer's market. I love how they try to tell all of us that this is a buyer's market. This will be a buyer's market when we see a substantial reduction in these overpriced homes that are on the market right now. Inventory jumped 23.4% from last year. That is a lot more inventory. Sales of previously owned homes dropped 5.4% in June compared with May. That's a substantial decrease. But I love how CNBC says that now all of a sudden it's a buyer's market. No, we're not there yet. We're a little ways away from a buyer's market. You'll know when we're in a buyer's market. But if you think because a home has been reduced 5%, that 10% it's time to jump in, you can. I'm not. I'm going to hold off here because I've seen this movie before, ladies and gentlemen. I understand how quickly and how violently prices can come down in the housing market, and what kind of destruction we're going to see, because I saw it in 2008, except this one is going to be much, much worse, because now you have an economy where job losses are coming. They've begun. They're coming. You have a lot more inflation than you did back in the 2007-8 crisis. You have more political uncertainty here. You have more manipulation here now. You have way more debt now. The average person is buried in credit card debt, and you just have way more problems right now. And this points to me that we're going to see a much more severe housing crisis than we did during the financial crisis of 2007-8. Here's another one from CNBC. It's too late to sell a house this summer, some real estate experts say. Again, this is absolutely a joke. More excuses. Now we're going to blame it on the heat. No, let's blame it on the economy. Let's blame it on job losses. Let's blame it. We can blame it on mortgage rates. I say let's blame it on an overpriced housing market and a growing pool of unqualified buyers who's going to buy these homes now when people are losing jobs, when people's credit's being destroyed, when their cars are being repoed, when they cannot save money to even put down on a house with a savings rate of 3.9%, or people just have so much debt they just can't get approved for a home loan. There are so many problems now, and it's going to make it much, much more difficult for people to buy a home, even when prices come down, because you still have to have good credit, you still have to have a job, you still have to have a decent income to buy a home, even when prices come down. And I'm watching in parts of the southern part of the United States, I'm seeing price reductions. I had an agent send me a $100,000 price reduction today. It's not enough. I just saw a house last week. Price went from $800,000 to $550,000. It's still on the market 10 days later. It's still overpriced. And sellers are going to come to the realization, by the time they do, they will have cost themselves a lot of money, because they're going to continue to chase this market down. And this market was so overinflated, and people still believe it's 2022. It's not. The game has changed. U.S. existing home sales puked. This on the Hedge today. Existing home sales slumped for the 4th straight month in June. We already mentioned this, plunging to a worse than expected 5.4% month over month. Existing home sales have not risen on a year-over-year basis since July of 2021. Median home prices rose 4.1%. Year over year to $426,900. That's the average median home. So, you know, I don't know. Good luck on getting a rate cut, because, you know, when you look at the market at all-time highs, gold's going up, home prices are going up, GDP is going up, everything seems pleasant. Why in the world? What's the excuse going to be for the Fed to come in and lower rates? And if they do, is this going to trigger even more price hikes in housing? Will they get even more expensive? I don't know. I really don't know. I think it's going to be very, very difficult. Something's going to have to give here, because if things aren't selling, you're looking at a housing collapse at this point. Prices can go wherever they want. At the end of the day, it's about, can you sell the home? It's about sales, and sales are collapsing. And so whether they hike, whether they don't, what is going to happen to prices? If you don't have buyers and more listings are piling up on the MLS, at some point, some seller out there is going to say, look, I got to sell. I need the money. I've got to raise some capital, whatever the case may be. Nobody's renting my Airbnbs. I got to dump these properties. That's the next comp on the MLS. That's the next comp. That price is the newest price on the block. And if that guy hits an emergency and he's got to dump his house, that is what the bank is willing to lend on the next house. That's how it works. But at some point, people out there are going to need money, and they're going to have to sell, because they cannot. Many people might be able to last longer than others. Maybe, you know, somebody could put a house and leave it on the market for a year and they don't care if they sell or they don't. But there's too many people out there that are so riddled with debt now that they're going to be forced to sell maybe their weekend house, an Airbnb, maybe their primary house. They're going to have to downsize. Somebody lost a job, etc. Something's going to have to give here. Increasingly cautious consumer. Polaris shares crash as high interest rates crash demand for ATVs and jet skis. Polaris makes off-road vehicles. I think they make jet skis. But their stock was down 4.82% today, 17% down year to date, and they are down 41.8% from a year ago. Their full year forecast for sales and profit has been reduced. This indicates the once thriving outdoor adventure market for ATVs, UTVs, jet skis, and snowmobiles is now in a deep freeze. Polaris now forecasts full year sales to decline, get this, 17 to 20%. I see, we're out here in the desert. I'll see a lot of people towing their Polaris off-road vehicles. I guess these things are not cheap. I don't really know much about them. $30,000, maybe $40,000 for a tricked out Polaris to go out to Glamis or go off-roading out here in the desert. So you need, an $80,000+ truck to tow the thing. and then you need gas to put in your off-road vehicle. You need diesel to put in your truck, and I've watched the last couple of years people buying these things and going out for the weekends and enjoying their time with their off-road vehicles and their jet skis. It's all coming to an end. I mean, think about this. Polaris now forecasts sales to decline 17 to 20%. Their stock is down 41.8% from a year ago. If this doesn't tell you what is happening in the U.S. economy, I don't know what is. But people now cannot afford to play with these toys, and these things are going to be going on massive sale. As I've said, the sales haven't really started yet. I'm sure there's some deals out there. They've definitely come down. But wait till people really get desperate. But, I don't want to see people suffer. I don't want to see people lose things that they worked for, that they enjoy. It's sad, but how many people really never could afford this stuff, but because interest rates were low enough, they just said, I can make the minimum payment, let's do it. Never thinking that there would be an economic downturn, never thinking that they or a spouse will lose a job, never thinking that anything could go wrong. I mean, everybody today is living like a damn rock star. They got the boats, they got the ATVs, they got the Airbnbs, they're living in the big house, they're driving the nice truck, they got the nice car, they got a motorcycle, they got everything. These people are living like rock stars. None of it's paid for. Everything is financed. And now, listen, this economy is going to shake this stuff out. It's going to shake this like a tree, and the dead branches are going to fall to the ground. And it's unfortunate that so many people are going to lose their toys. They're going to lose things that they worked for. But a lot of this could have been avoided because people probably should never own this stuff from the beginning because they never really could afford it. So be careful of the big ticket items. Be aware that sales are coming. The RV lots are full. The boat lots are full. The off-road vehicle showrooms are full. The pickup truck lots are full. The car lots are full. What are they going to do with all this stuff? Who's going to buy all this stuff? Think about it. Yahoo! Red Lobster moves closer to bankruptcy sale to lenders. More bad news. If you work for Red Lobster, it doesn't look good. Red Lobster will be forced to hand over its equity to its lenders in a debt cancellation deal and will operate with fewer locations. They've already closed, I believe, 93 locations. They have roughly, I think, another 500 in operation right now. But if they do not find a buyer here soon, they're going to be closing a lot more Red Lobsters. Is that another 100, 200, 300 Red Lobsters going to close? I don't know, but it's probably going to be more than the 93 that they've already closed. And so people who work at Red Lobster, that is their main source of income, they could be in very, very big trouble. It's going to be more problems for commercial real estate too, because if nobody is leasing that building, somebody's not getting paid. More than likely, that's going to be a regional bank. Here's another one from CNBC. The number of low-wage U.S. workers is dropping, but 23% still make less than $17 an hour. Who's going to buy all these boats, RVs, ATVs, UTVs, all these homes when 23% make less than $17 an hour? The federal minimum is currently $7.25. And most people, whether they're making minimum or they're making above minimum now, most people are working part-time. They're working part-time. I mean, how are we going to sustain this economy when people are making this kind of money and you see the prices of cars, you see the price of food, you see the price of rent? In my humble opinion, I could be wrong, comment down below. I think all this needs to crash, and it needs to crash soon, because we need to start over. We need to know what prices of these assets really are. What's the price of a house today? What's the real price? Not the artificial propped up rate that, thanks to the Fed keeping rates, at 3% or below, buying mortgage-backed securities. having a Fed rate of nearly zero for over a decade, really juiced these markets, the stock market, the housing market. This is all artificial. And thanks to the Fed printing all this cheap money, keeping rates too low for too long, mortgage rates under 3%, they have now created a massive, massive housing bubble at the worst possible time, because now people are losing jobs, the economy is turning, it's in big trouble, and we're going to see all hell break loose in the housing market and probably the stock market at some point. What's going to break first? Will it be the stock market, which completely is in this utopia now, where people just think nothing bad can happen because it's just going up? Wait and see. When it crashes, just like it did in 1929, like it did in the early 2000s, like it did in the 80s, like it did in 2008, people will be taken by surprise and they will go, what happened? I thought this couldn't happen. It's different this time. I thought it was different this time. It's never different. They always say that, except this one's going to be much worse than all the others. America's 60-year-olds are staring at financial peril. Wall Street Journal today. Shannon Sharps in this article says the most important things in her life right now are a place to live, indoors, living indoors, not outdoors. She wants to live indoors, have water, have food. She has about $3,000 in her retirement accounts. She says, I'm thinking how I'm going to provide for myself from now until I drop dead. Again, another sign of just how bad the economy is. If the economy was so good, how come people don't have money saved up? How come 78% of the country is living paycheck to paycheck? How come people now are so dependent on credit cards? Yes, too many people live way beyond their means, but there's a lot of good, hardworking people out there who didn't live beyond their means, and they are really suffering right now. People are in big trouble, and you think about how many people have no money saved up for retirement. They don't even have money saved up if they had to go to an urgent care and get 10 stitches. They don't even have enough money saved up right now if they had a flat tire to get their tire replaced. 78% of this country is living paycheck to paycheck. Half this country doesn't have $500 saved up for an emergency. And if they have one, you know what they run to. They run to the credit card at 23 to 30%. And they get themselves into more trouble. We are getting, as a country, in very, very big trouble. And I think we're going to have a very, very difficult time getting ourselves out. I was talking to Enrique today, and he was, we were talking about, this real estate collapse happening in China. And we were talking about, well, what if America goes into oppression? It's not really what if, but when. How in the world will we get out of it when we don't make anything here except consume? We just consume, consume, consume. We make debt while other countries manufacture and make things. I don't have the answer. If we don't turn this around soon, if we don't begin to manufacture and make products right here in America, we're never going to work our way out of this, because we are heading into a massive depression. We are heading into an economic crisis unlike we have ever seen before. And I know people can't believe that, and they may laugh at that, but I wouldn't laugh, because most of the stuff we've been talking about the last couple of years has already happened. It's already happened. And yes, less and less people are laughing now, because they're beginning to realize the reality of what's happening, because it's happening to them now. They're realizing they don't have as much money saved up. They're realizing that they're one paycheck away from big trouble. They're realizing that they're not stretching their pocketbooks. Like their dollar doesn't stretch like it once did. They're getting less at the grocery store. They're having to eat less. Maybe they're financially insecure. Maybe they're falling behind on their bills. They realize that they're paying a lot more for health insurance, auto insurance, you name it. And so it's not a laughing matter anymore. And for some people, they've lost it all. They're on the streets. Many people are now looking at homelessness as the next option, because they've run out of all other options. I want to finish with this last one. Department of Defense to give troops economic hardship bonus of a whopping $20 per month. This on The Hedge today. Who in the world would join the military at this point? A $20 per month bonus. Another slap in the face to the military. It says here only 57% of military families would recommend joining the military, compared to 74% in 2019. So I can't even imagine that even 57% of military families would even advise a family member to join the military at this point, especially when we don't even know who's running the country. When you look at what's happening, in Eastern Europe, what could be possibly happening in Taiwan, they could be sending your kid over to Eastern Europe. They could be sending your kid to Taiwan. Do you really think that that's where your kids need to be? I sure don't. Whether you're a military family or not, would you really recommend that your kids join with this type of leadership now, with these type of wars? It makes no sense to me whatsoever. And another slap in the face, a $20 a month bonus. What a slap in the face. I would look at all other options before the military, because they obviously don't care about you. They'll send you anywhere to die, and then when you get back, they don't want to take care of you. And they're going to give you a whopping $20 bonus. What a slap in the face. And then when you get here and you have PTSD or you have some issues, you live on the streets and nobody wants to help you. So that's what you get. Then they send you to wars to protect corporations. Not protect America, protect corporations. You're dying for corporations. You're dying for the top 0.001%. You're just a pawn. When they're done with you, they're done with you. So I'm not telling you not to join the military. I love everybody I know that's been in the military. All just the utmost respect. Some of the best people I know, great friends. But this is this is 2024. We can look back, we can look at history, and we now know, why we went to these places. And many people, when they got there, began to realize what they were there for, and it wasn't what they signed up for. So be cautious, ladies and gentlemen, before you sign your life over to some entity. I'm going to leave it there. Have a wonderful day. Be safe out there. So much happening. Comment down below. I want to know your thoughts. Make sure to share this video, share all my videos, all of your social media, and make sure that you give God all thanks for another day of life. That's the most important thing. We're alive today. If you're healthy, you should really give God all thanks. If you have a job today, thank God. If you have a roof over your head, thank God. If your family's around you, thank God. Have a good day. Talk to all of you soon.